Welcome to The Explainer. Today, we're diving into a story that starts in Texas, but honestly, it signals this massive shift for global business in America. And we're not just talking about real estate here. This is about a fundamental change in how the U.S. economy looks at foreign money. And you know where it all started? With what was supposed to be one of the safest bets in the world: American housing.
For years, this was pretty much the playbook, right? A simple, powerful formula for winning in American home building. If you were a big player and you had the cash, you could just snap up land, throw up subdivisions, and basically consolidate your power, especially in a market where, let's be honest, there's a never-ending housing shortage.
But then, a new variable got thrown into the mix, and this one, it changes the entire game. All of a sudden, where your money comes from is just as important, maybe even more important, than how much of it you have.
Okay, so for more than a decade, you have to understand, the U.S. housing market was like a giant magnet for global investors. I mean, it was seen as the safest, most profitable bet you could make. And for a good long while, one country in particular was playing this game better than pretty much anyone.
So, let's talk about the two ways you could play this game. On one hand, you had what we'll call opportunistic capital. Think of these guys as tourists. They're in, they're out, totally focused on those quarterly numbers. But then you had strategic capital, and this is the Japanese model. Firms like Sekisui House and Sumitomo Forestry. They weren't tourists at all. No, they were playing the long game. They were patiently buying up American home builders, putting local teams in charge, and building these massive empires that were designed to weather entire economic cycles, not just a few bumpy quarters.
And then Texas did what Texas does. They're never shy about making a big statement, right? Well, they went and changed the rules of the game, like overnight. A single decisive move that sent absolute shockwaves through the entire industry.
Yeah, this wasn't some minor policy tweak. This was basically a wall going up. We're talking about Texas Senate Bill 17. It targets countries that are seen as, adversaries to U.S. interests. And it didn't just add a new line item to a deal, it put a whole new gatekeeper at the door. Suddenly, you've got the threat of being forced to sell your assets, huge penalties. And just like that, geopolitics has a seat at every single negotiating table in Texas.
And this slide just lays it out so perfectly. Before, a land deal was all about three things: price, timing, and certainty of close. Simple enough, but now there's this fourth factor, this giant question mark: political risk. And let me tell you, that one can absolutely torpedo a deal before it even gets off the ground. If your ownership structure looks even a little bit dicey, forget it. The deal's dead.
So you might be wondering, did this actually have an impact? Oh yeah. It didn't take long at all for the market to react. And the story of one company in particular, Landsea Homes, became this perfect case study of just how real and how serious this new political risk had become.
All right, so here's the setup. You've got Landsea Homes, which is backed by China's Landsea Group, and they were betting big on Texas. I mean, they were going all in, scaling up like crazy, making huge acquisitions like this one to really plant their flag in that booming North Texas market. But then, look at this. Just a year later, in a move that honestly shocked everyone, Landsea sells its entire U.S. operation. And let's be clear, this wasn't some clever strategic pivot. This was a retreat, a forced retreat.
And the numbers behind this move are just staggering. I mean, look at this chart. Their Texas assets, that was over half the company's entire value. The market that they were betting their future on suddenly became a toxic asset on their books. Just like that, their biggest strength became their biggest liability. It's wild.
So why would a company just up and sell its most valuable market? Well, here's the bottom line. When your ability to even operate in your most profitable market becomes uncertain, and it's because of who owns you, well, your entire company's valuation is suddenly at risk. The market is smart. It doesn't need a formal announcement to figure that out.
So what does this all mean? Well, this new landscape, it's not really about scaring all foreign money away. Not at all. It's more about filtering it. And whenever you have a filter, you're going to have a very clear set of winners and losers.
Okay, so let's break it down. Who wins? Well, you've got the players with what we're calling compliant capital. Think about those Japanese and Canadian firms we talked about, operating through their American arms, or just the big U.S. builders. They're golden. And the losers, pretty much anyone with capital tied to those targeted countries. Their ownership is now seen as misaligned with U.S. interests, and that makes them a huge liability.
And here's a really interesting side effect of all this. It's not just about who loses, it's about who wins and how much they win. For the builders who can pass this new, let's call it an ID check, the competition for land has actually gone down.
Think about it. With fewer bidders in the room, the ones who qualify suddenly have a ton more leverage. They can call the shots.
All right, let's bring this all home. Because this isn't just a Texas story, or even just a housing story. This builds to a much, much bigger conclusion about the future of business in America.
You see, Texas isn't closing its doors, not by a long shot. The Texas growth story is as strong as it's ever been. The core reasons people and companies are flocking there, the population growth, the corporate moves, the insane demand for housing, none of that has changed.
So Texas isn't closing its doors, it's just checking IDs at the entrance. That's really the best way to think about it. What's changed is the price of admission. The market itself is now this geopolitical filter, right? It rewards the builders with the right kind of capital and basically pushes anyone with the wrong passport to the sidelines.
And really, if you take one thing away from this explainer, let it be this. The era of capital is over. That old idea that all money is green, it's just not true anymore. Where your money comes from now has a political identity, and that identity can be the deciding factor on whether you get access to America's best, most profitable markets.
So if housing, something we all need, is now a political tool, what's next? Texas has drawn a line in the sand. They've made it crystal clear that market access and national interest are now tangled together. And that leaves us with this huge, critical question for the future of global investment, not just in Texas, but all across the U.S. If this can happen to housing, what industry is next?